Good morning, everyone. This is Danny Ross. I want to talk to sellers or owners, people who own real estate, and even potential buyers about private mortgage insurance. A few of my customers have asked me several questions about PMI. When does it come off? How much is it? Let me go over some basics. What I want to do in this few minutes is talk to you about when you buy a home, what determines the monthly premium for PMI. Secondly, how do I get rid of PMI? How much money do I need to put down? What percentage? Thirdly, let's say I've owned a home for 5, 6, 10 years. How do I get the PMI off my total monthly payment? I'll discuss private mortgage insurance through FHA, VA, and conventional. Those are the three sources where you will utilize it. So first off, let's talk about what is private mortgage insurance. Okay, anytime you get a home, purchase a home, you have to have it insured. So FHA calls it mortgage insurance premium, known as MIP. It used to be 3.8% initially when it started, way back when. Now it's 1.5%. That's added onto your loan. That is also has what is called a renewal fee. So let's just first talk about FHA. FHA, if you sell your home in the first 7 years, you can get a prorated amount back of your MIP. After that, you won't get any money. But on top of that, they've lowered it from 3.8% to 1.5%, and they charge what is called a renewal fee. That renewal fee is 0.5%. Now, to get that removed, I have an FHA loan currently on my home. I'm paying, I think, $65 a month. To get that removed, my original loan amount was $161,000 and change. Once that loan amount that I have hits 78%, 78% of 161, which I believe, I'm doing this in my head, is roughly close to 128,000. Once I hit 78% of that initial loan amount, then my monthly premium will stop. So that would save me roughly $65 a month, which I'll be hitting probably in 2 months currently with Wells Fargo. So again, to reiterate, my original loan amount was $161,500 after my down payment. FHA charged me a renewal fee. Once I hit 78% of that amount, it will go away for FHA. Okay? And it is not automatic. They say it is, but I would definitely call your lender and say, hey, I've got 78%. I'm down to that amount, and please go ahead and remove that monthly charge. When you buy a home on conventional financing, okay, they are going to charge you PMI if you put less than 20% down. If you put 20% down, you can completely get away from PMI. In other words, then you have what is called an 80% loan to value, where there is no need for PMI, and you'll save a big chunk of money. However, most people tend to put 5% down on conventional financing in different insurers, such as you have MGIC, Mortgage Guarantee Insurance Corporation. I don't know if they're still around, but they were one of the big PMI lenders. You have PMI. They charge different factors based on your credit score and also how much you put down. The more you put down, the lower your monthly MIP will be, okay? If you put down, say, 3%, then the factor could be 0.97. The more, say you put 5%, it could be 0.78% of your loan amount. It depends on how much your loan to value is. Loan to value means how much you put down from the original loan. So if you have a $100,000 loan amount, you put 5% down. 5% from 100 is 95%. That means you have a 95% loan to value. So here's the thing. If you have a home that say it's worth 200, let's say worth you bought it for $210, you put you finance $200. Your PMI will be, let's just say, could be 0.97. You take 0.97 times your loan amount of $200. That is your monthly premium. What the point I'm trying to get is, how do you get rid of it? Well, it's very simple. Let's just say, for instance, you had a $200,000 loan amount. Once that loan amount gets to 78%, most people think it's 80%. Well, 80% of 200 is 160. It's 78. So when you get down close to 158,000, your PMI stops that monthly premium. Again, most people thought, oh, I financed 300,000. Once I get to 80%, which would be 240, it goes away. Yes, you got the right concept, but it's not 80%, it's 78%. So it's important to keep tabs on your mortgage balance. And once you attain that value, or excuse me, not value, once you attain that loan amount that is 78% of the original amount, then guess what? You can get rid of your PMI. I hope this clears up some questions for you. VA, I told you I'd talk about, they don't call it private mortgage insurance. What they have is called a VA funding fee. So when you go ahead and get a VA loan that's say for $200,000, they're going to go ahead and add a VA funding fee automatically to your home. So let's say you think you're getting a home with zero down, because veterans can get 100% financing. You go to close, they're going to say, hey, your loan balance is $202,000. They're going to add 1% to that VA funding fee, okay? And that is not refundable. That is for the life of the loan. The only way to get around that VA funding fee is put a pretty good chunk of change down. I'd have to look up how much you would need to get rid of that fund. No, excuse me. You can pay that VA funding fee up front. So if you don't want to finance it over 30 years, then you could pay the 1% up front. That would be part of your closing costs. I hope this kind of answers some of your questions on PMI. PMI has been around for years. The only way you can get rid of it on conventional is put 20% down. On an FHA loan, it's there, okay? They're going to have the MIP up front, which is now 1.5%. When I started in real estate in '83, it was 3.8%. So if you bought a $100,000 home, you'd have a balance of $100,000 plus 3.8%, which is $3,800. You'd owe $103,800 when you started off on that loan. Now they've lowered it to 1.5%, but they added the renewal fee. So to get rid of that renewal fee, you have to get your loan balance, the original loan balance, down to 78% of that original amount. Okay. So again, I finance 161. My math's pretty good in my head. I believe I have to hit 128,000 to get at 78% of my original loan. Then I save $65 a month. Okay. If you have any other questions, please give me a call, 713-256-6780. Have a great weekend. This is Danny Ross. I'm a real estate broker. I have the CRS, GRI designations, which less than 1% of the realtors in the nation have. CRS is Certified Residential Specialist. GRI, I'm a graduate of the Real Estate Institute, and I have over 1,800 hours of real estate courses. And I'm a state certified, Texas certified real estate instructor. Anyway, if you have any questions, please contact me either through my number or email me. Ross, ROSSDP54 @gmail.com. God bless.